This is just a reminder that all content provided by Trade the Chain and Market Rebellion is strictly for educational and informational purposes only. Absolutely none of this is investment advice, and it should not be construed as such.
Hello, everybody, and welcome to today's episode of Trade the Chain. It is Monday, August 9th, and we thank you for joining us today. Actually, it's fabulous Monday. It's the most fabulous Monday we've had in a long time. We got the markets are ripping right now. Bunch of sea of green across the screens. And I think that may be linked to something else, which we'll cover on the back end of this episode, which is the latest update from Washington, which is turning out to be more positive. And I hope all the suicidal crypto people from last week are now feeling good about themselves. So we're going to get into that and explain exactly what it means for both crypto exchanges and you folks out there as well. But as usual, joined by CJ and Monty, our crypto analysts from marketrebellion.com and the best hair in crypto, Ryan Gorman. So, folks, how's everybody feeling today?
Good. Better. More optimistic. Yeah.
Monty?
Yeah, I'm feeling good too. Feeling good. Lots of talk about the new Suicide Squad movie in the comments. And I have to confirm what they're saying. I watched it last night. And I didn't like the first one, but this one, I really enjoyed it. And the 2 hours flew by. So if you haven't seen it, check it out. And all those guys saying that it's good, I agree.
That was your yesterday evening entertainment, was watching the new Suicide Squad?
Yes, sir. It was a very nice evening.
Very cool. All right, we have CJ and Monty. We're going to jump into the big boards with them. We're going to check out these charts. Let everybody know how things are going right now. Also, we're going to bring up some sentiment from both Ethereum and Bitcoin, because it's actually really interesting to see how it's been changing direction with the negotiations going on with what we now call the crypto infrastructure bill up on Capitol Hill. So, CJ, Monty, floor is yours, gentlemen.
Thank you, Alex. I'll take us through the charts very briefly, and then I will pass it back to you guys, like always. But there's some really cool stuff going on, mainly technically. Of course, we're going to talk about those fundamentals and what's been happening with the crypto infrastructure bill as well. But I want to start here with the weekly chart, because we did just get a new candle last night on Sunday. And so let's take a look at Bitcoin's macro trend and some of the things we've experienced historically when we've came close to these bullish crossovers on the MACD. Because I'll just say it right now, I mean, things are looking really positive in terms of like oscillators such as the MACD, such as the TSI. But as you can see here, we are fast approaching a potential bullish crossover, which would likely be an aspect of continuation. Even if we do get a little bit of profit taking, I still see this trend continuing up until the 50s throughout the rest of August and possibly September as well. The second thing that is similar to the MACD, but is even a little bit more clear, is the TSI, or the True Strength Index. And so every time we've gotten one of these intersections, specifically below this midpoint, you can see this gray dotted line being the zero line here. And historically, each time we've seen a bullish crossover, that's typically been the bottom. And we've began historic uptrends following those conditions. We saw it again in the bear market of 2018, and just before COVID hit, we saw another one. This particular time, we saw two. Of course, COVID gave us that black swan and took us down 40% in one day. If we did not have COVID, or that black swan event really never occurred, I've got a pretty good conviction that we would have just kept going up, and the bull market probably would have started maybe a couple months earlier than it did. But the whole point of this is to look where we're at now. And it's pretty evident that we are approaching very nice continuation with a further bullish crossover, likely coming here in the next couple weeks as price kind of continues its uptrend. So really bullish metrics, and this is what you want to see from the bullish perspective, especially on the weekly. When we were going up all throughout this time and we were seeing this bearish crossover, that's a huge warning sign to the bulls saying, hey, we've probably not topped out right now, but the bullish momentum is really slowing down and we're probably going to turn soon. So it's good that we're seeing the inverse of that. Now, to look at things on a more clearer kind of one-day perspective, I do want to highlight some of these critical levels that are essential to the trend that we've actually come over now. So this violet line that you can see, this is the 200-day moving average, 200 SMA, and we've actually just gotten back above it. And so a lot of people said, we're in a bear market. When we fell down, once we broke below that 20-day moving average, a lot of technical analysts just declared, by definition, we're going into a bull market, stock to flow is broken and whatnot, and we're going to get a head and shoulders pattern to 15K. The reason why we didn't get a head and shoulders pattern to 15K is because technicals are just one aspect of the equation. You need to have an understanding of fundamentals, because the one thing that I do believe, and I'm starting to believe it even more with stronger conviction, is that price direction is strongly determined by supply and demand, whether it be outstanding shares in the markets or shares held by large entities or being coins, in the case of cryptocurrencies. So this is clearly an accumulation phase that is now ended, and we are seeing the spring upward. And so the last thing I'll finish with here on the daily time frame is that schematic and that overlay that we've been talking about. This is one of the images that we had shown. It was also included in a tweet that I put out a couple weeks back, but we talked about this on the show and how, we could see us breaking these levels with a potential pullback that would ultimately be the last line of support for the bears, because that really serves as the bear trap. That was something we were expecting. We got our pullback back to that Fibonacci level around 37 or 36K. And then we began the third and final leg up. And so ultimately, we are now very near the end of phase D, in which we're probably going to pull back, see a little bit of profit taking, and then a further continuation up into the 50s throughout the later weeks in August. So I've actually got some pretty strong conviction this time around, and it's really promising to see how accurate that schematic has been and how effective it could have been if you would have been looking at it a few weeks back and buying based on it.
So you're right about saying that there's more to Bitcoin than fundamentals. I mean, more than the technicals, there's fundamentals as well. And I think a lot of what factors into those fundamentals to a degree is sentiment. Because if we had a negative outcome today in Washington, D.C., sentiment would have gone down and the price would not have shot up the way it has, right? Community has proven to be a large driver of price, along with anything, with all the other factors that you've gone over. And it does feel to me like this is largely, today at least, a sentiment-driven rally on the back of what was a technical rally. So, I mean, given the good news that we have today, do you think that we kind of level off for a little while here before surging higher? Or are we going to keep powering through up through the Asian trading session?
I think there's a good case to be made that we continue surging higher. And, I'm basing that on a comment from one of our members in the chat, Richard. He says all the institutions are coming back from their summer break, LOL. And I completely agree with him. And I want to just share this interesting metric. So Glassnode came out with their, this week on chain report this week. And there was a lot of interesting metrics in there, but this one to me, I thought was very interesting. And this was relative transfer volume breakdown by size, and it's adjusted for entities. And if you like follow CJ9 in the crypto room, you know that we spend a lot of time trying to track institutional interest in the space. I think, CJ was just talking about supply and demand, and I think understanding those concepts in conjunction with, sort of the market flow and where the money's coming from is very important to kind of dictating the direction of price. And we've looked at things in the past like CME open interest and futures open interest in general to kind of gauge institutional interest. I think this is a great gauge as well. So this is basically transfers of Bitcoin of more than $1 million. And as you can see, during this period of time, it was increasing steadily, But then once we got this top here, we saw, a decline in those transfers of above $1 million. But now it's coming, back up, and we're trending, positively again. So I think this is a good indication that although the institutions were stepping back here and more likely selling into the market strength, I think now, given, the somewhat positive news we're getting today and the more regulational clarity that's going to be expected in the coming weeks, I think institutions are starting to step back in, and we're seeing that with an increase in these, big transfer volumes on the Glassnode Insight. So I thought that was interesting. It ties in with that comment, and also kind of ties in with the institutional news and the Capitol Hill news as well.
So another thing that goes along with that, Monty, I'm glad you brought up that Glassnode data, because another piece of data that's great at tracking, how a bull rally is gaining further traction is looking at the number of active addresses. Because once the retail money starts getting in, that's when we start seeing these parabolic surges higher. And wallet addresses right now are up to 800,000. They haven't been at that level since they briefly touched it on the way down after dipping below, but since the bull rally earlier this year, back in June. So it's good to see that wallet addresses are also rising, because that to me is a sign that we're going to have even further support as we move higher throughout the rest of the summer and fall.
One of the things that I find really interesting is I just want to go back to the sentiment chart real quickly. You go to the 7-day, and you can see how, just pretty range bound sentiment was for Bitcoin. But then you had the House. Who was working on the weekend? The House, Ryan?
No, Senate. The Senate was working on the weekend.
So the Senate was working on the weekend, and you saw it begin to drop. And then it just started going to red. But then we got the breaking news that we're about to cover, the real happy-go-lucky update. And we're pulling out of this thing at like breakneck speed. And same with Ethereum too.
So the reason that it kept going further south, even this morning, Alex, is that early reports were that we were going to have a bill passed with the original language where everything was, everything was either a broker or an exchange, regardless of what you actually were, whether you were a software developer, whether you were a node or node operator, or a non-custodial wallet. And a lot of the reporting requirements in that bill just aren't technically possible or feasible. So the view in the broader market and the industry was that the government was trying to choke off innovation and force these businesses outside the US. Right, so I can see why sentiment was going down, 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 down until that Toomey announcement late morning. I think it was like 11:30 or somewhere around there, and that's when you can see that sharp rebound in sentiment and how things moved higher, almost like rather dramatically even.
I know it was the news has been breaking throughout the last week, and it's amazing. What do you think? Now, here's something. There was a little bit of a scare this morning, actually, with Ethereum broke down below levels, and that was a little frightening. Any thoughts on that? Can you go over some Ethereum for us, Monty?
Yes, sir. Let me just pull up the chart real quick. Yeah, ETH did have a bit of a sell-off there, but came right back, and I think that's just because the market's holding up so well. If we had more general market weakness, we could have seen a further correction from ETH. But this goes back to that supply and demand dynamic that CJ was talking about. Under the new improvement protocol, ETH is being burned, less fees are being doled out. And I think as a result, we're just seeing a natural increase in price, even with, demand remaining relatively the same. Price is increasing because the supply is, relatively decreasing. So interesting stuff here. We got yesterday was looking like it could have been a potential turnaround on this somewhat, reversal looking candle here. But the fact of the matter is, we got more positive price action today. Volume is still building. Volume today was actually very strong, and I expect it to continue to be strong given the volatility we've seen. So the biggest test for ETH, I think, over the coming days, this week in particular, is going to be to stay above 3K. If it can stay above 3K, there isn't really all that much resistance until we get back up here, around 3,400 is our first level of resistance. And I expect the moves between here and there, and then to our previous all-time high back up at the, to 4,400 range, I expect those moves to happen very quickly because of the lack of, significant levels we created on the way up and on the way back down. So I'd be watching for a potential retest of some higher levels in the 3Ks this week. Like you said, Alex, it was a bit concerning here, but now that we've gotten above that highly critical level of 2850, you can see we got a really nice bounce off this level here, 2850. This is a level that we struggled very much so to get above, when we were first retesting these levels here and trying to show strength during this very precarious period of time. But 2850 had a massive sell wall built up around it, and now that's flipped to a buy wall, and people are willing to buy at that level, which is very encouraging for ETH going forward. So, we're entering back into that, kind of parabolic period of the market cycle where I think ETH could make some very strong moves in just a matter of days. And yeah, that's basically what I'm seeing at this moment in time.
So I don't think it's a coincidence that since August 4th, when ETH was at about 2,400, price has gone up to nearly 3,200 when you have $55 million worth of ETH burned in that time frame. Right, so ETH doesn't have a finite supply, so it's not like if Bitcoin had a burning mechanism. However, when you have 55 million burned in 5 days, and if it annualizes at 4 billion a year, that's definitely going to build in that supply demand that you're talking about, Monty. Right. So the less ETH available in the market, the higher price it will be. And when you're burning 55 million in only 5 days, that's remarkable. That's 1% of the supply. That has to have traders feeling a lot more optimistic about ETH going forward.
Yeah, and just for the folks out there, just because maybe you feel like you missed the bottom a couple of weeks back, you haven't missed the boat in investing. I still think there's a lot of great opportunities. I think we have a lot of great upside still to go. I don't even think to the beginning of what I think is going to be a pretty parabolic run over the course of September, October, November, in my opinion. So we'll see. I think August is going to be the accumulation month, so to speak, of your favorite assets. Now, Ryan, what do you got here?
So if you missed ETH's bottom at, say, 2,400, I don't think you've missed ETH's potential upside. The most popular options contracts right now are 50K calls in March of next year. So what that means is that traders think that ETH will be at least at 50K or higher. And if that's the most popular options contract, we still have such a long way to go and so much upside opportunity in ETH that you absolutely have not missed the boat. And that's not something that I would be worried about if I was looking to accumulate ETH. And as everyone who watches this show more than once a week knows, ETH is my largest holding. So that's absolutely something I'm looking at continuing.
Are you going to get a Captain ETH shirt then and retire the one you're wearing?
I mean, they're harder to find, right? The Captain Bitcoin shirt, that my wife found this for me. I love it. But if I can find a Captain ETH shirt, I'm all over it.
All right, cool. I mean, listen, I'm totally pumped. This is just fantastic feelings going all around. A lot of exciting and new projects, actually, that have come out that we were all hoping for. Some people were anticipating that weren't even out during the first leg of the bull run. So I'm excited to see what happens to those and how that furthers the momentum of the crypto community. Now, before we head out, Ryan, tell us exactly where we stand right now in Washington with the crypto infrastructure bill.
Absolutely. So the infrastructure bill, as we discussed earlier in the episode, as it was originally proposed, was seeking to take $28 billion worth of taxes from the crypto industry, be it from brokers, traders, exchanges, miners, what have you. And it was clearly written by people who, though they're well-intentioned, they don't understand how the crypto industry works. So there were two competing proposals, one from Senators Toomey and Loomis, and then another one from Portman and Sinema, that tried to modify the language in a way that was more conducive and more, I guess, implementable from a technology and reporting standpoint. And Senator Toomey from Pennsylvania announced this morning that a compromise has been reached where it isn't exactly perfect. It's not an ideal situation, but there was never going to be a perfect, ideal solution to this issue. And what it did was it narrowed the scope of definition for a broker or an exchange to what's more or less commonly seen in traditional markets. Miners, software developers, non-custodial wallets, nodes, node operators, what have you, all these other different participants that you have in the crypto markets that aren't in traditional financial markets, they aren't required to do reporting, file 1099s, and do all these different things that they were going to have to do DEXs. They weren't going to have, it doesn't appear that they're going to have to do that under the new proposal. So, excuse me. So that, I mean, it would appear to me is what's driving a lot of this positive sentiment higher, and what is likely to have caused some of the, at least some of the rally today off the back of what happened during the overnight session here in the U.S.
Okay, that's interesting, and it's also sounding much, much more positive. So,
you know what Jesse Proudman said to me? Jesse Proudman over at Strix, Leviathan, and Makara, what he said to me earlier today. This is also proof that the government is now taking crypto seriously, and they see it as a long-term asset class that stands to grow and gain more legitimacy if they're looking to tax it, and they think they can make $28 billion off it and fund government programs with it. So this is almost kind of like a tacit endorsement from the government that Bitcoin and cryptocurrencies are here to stay. And that to me is a good thing. It's a good sign. Regulation and taxation are good if you want something to stick around long term, because that's when the government starts to believe that that's the case as well.
Do you think Biden has a ledger, guys?
Biden has like 5 MetaMasks.
All right, guys, before we head out, one quick thing we'll show you. Currently on the sentiment charts to Trade the Chain, we have the daily sentiment indicator here, and it looks like we got Zinfin Network, Tezos in the number 2 spot, 84 on the very bullish daily. We have Reef, Orion Protocol. Let's see, Sushi number 8. Yeah, Decred number 12. So market's looking good overall. I'm super psyched. I'm positive. I'm really actually happy. So opposite of how CJ looks right now. But don't forget, guys, go visit marketrebellion.com/crypto. Check out CJ and Monty's educational and actionable insights over there. Of course, tradethechain.com, 14 days risk-free. Give that a try. Hang on to your handlebars. But although right now I think it's going to be pretty steady until tomorrow, but we're definitely keeping an eye on what's happening and if anything further changes. So until then, take it easy, guys.
Bye, everyone.